Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark looks at how the major equity markets reacted to the U.S. Fed rate hike. Trends Journal publisher Gerald Celente tells us what to expect in the new year, including Donald Trump, consumer, and high-tech trends. Real estate consultant Ross Kay gives us what he calls the real Canadian real estate numbers and the impact of BC's new home buyer incentive. Plus, we'll wrap up the latest from the Canadian equity markets. We'll talk to Ross Clark right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Always a pleasure to be with you, Jim.
All these headlines about the U.S. Fed hiking interest rates for the first time in a long time, the second hike in 14 years. Now, did this really affect the equity markets at all?
Well, it had very little effect, really, in terms of the equity markets. The quarter point was clearly telegraphed to the Fed from the open markets for the last month and a half. So, one of the items that did come out here, the dot plots, that's the projection of where the various members of the Fed believe that inflation and rates will be in the coming years. Those moved up marginally. And there was a more of a hawkish than dovish comments coming out. So the bond market, we ended up seeing the 10-year yields go from 248 at the beginning of the week up to about 260. So each of those little points is enough to put a bit more of a bid behind the U.S. dollar. U.S. dollar now on the basket has gone from, in the summer, the index was around 93.5 to 94. We're 10 points higher as of the end of this week at 103, and that's a new multi-year high as far as the dollar is concerned. We're thinking still that U.S. dollar will continue higher, targets up around 112, so another roughly 10% or less from where we are here. But wouldn't be at all surprised that there is a correction within the dollar in the next couple of weeks. It's been a pretty good move, and if anything, the news from the Fed, for all that it was there and a little more hawkish, it's not enough to really drive it to dramatically higher from our perspective.
Has the Canadian dollar been lucky to hang in at 75 cents when other currencies compared to the U.S. currency have really plummeted?
Well, actually, the dollar, the Canadian dollar, usually if you have a move up in Fed rates, you will see the Canadian dollar move up after that. However, this time around, we had strength in the Canadian dollar finally in the 2 weeks leading up to the Fed announcement rather than after. And our feeling around here is that this shift, there was total anticipation in there of the Fed move, and so Canada had already had a pretty decent rally. It was being held up primarily because of what was happening in commodities, and it had finally actually seen a bit of a better correlation with the oil than we've been seeing for most of the year. So by the time it had got up to the middle of the week here, it was pretty evident that the Canadian was going to run out of some steam, more so than we might have thought. I mean, it's down a good cent and a half from Wednesday morning. But it's getting back more in line with what it should be doing relative to the other currencies. We're still of the mindset here that the trend for the Canadian is down. If anything, you take a look at the channel that it's been in since the April high. This week we just went up and tested the upper parameters of that, and we're now into the middle of the channel. So there's still now a lot of room on the downside for Canada as we move into next year.
With the Dow approaching record highs and the 20,000 mark, what's that doing to the price of gold?
Well, with interest rates also moving up and the market being strong, the demand for the gold market has dropped off significantly. And, we take a look at that 17-year cycle we've talked about on the dollar index, and then you get the inverse of that in gold. We closed off the week at 1133 in gold, a pretty rough week, new lows for the last 6 or 7 months. And when we look at the distribution pattern that we've had through the summer and the way it's rolled over, we're anticipating somewhere around 1100 is a pretty reasonable target. And when you have weakness in gold in that fourth quarter, quite often you will put in a December low, small bounce, usually mid-month in December, and then probably look for a better low as we move into January, February. And from there, if things are as we hope, we should be looking for basing and a better first and second quarter for gold.
Ross, keep the grandkids happy. Find a nice toboggan hill for them.
We will, with that fresh snow that's coming on Sunday.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Coming up, Gerald Celente, next on This Week in Money.
Always consult your investment professional before making any investment decision.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Gerald Celente. He's the publisher and creator of the trendsjournal.com. Welcome back to This Week in Money, Gerald.
Oh, it's great being on with you. Thanks for having me on, Jim.
And you're always speaking to us from historic Kingston, New York, aren't you?
That's right. The most historic Four Corners in America, the only place with pre-Revolutionary War stone buildings on each corner. And we own 3 of them.
You're lucky to have some history around you.
Oh, yeah, it's beautiful here.
Well, Gerald, again, congratulations. You're one of the few people who picked Donald Trump to win the election, by the way.
Well, we did that back in May in the Trends Journal. And the reason was, it's that old Clinton saying, actually, from 1992, when he ran for president. It's the economy, stupid. And that's all it was ever about. And people around the world are losing money as the richer are getting richer. And Trump was he wasn't the messenger, it was the message. And that's what we're looking at now. And you're looking right now in America at small business optimism at 2009 highs.
Is that optimism worthy of Donald Trump's victory?
You know, we believe it is, and we're political atheists, as you well know. And there's never been an election in America with 2 candidates with such high negativity ratings as Trump and Clinton. So we only call the shots the way we see them. And Trump coming into office, look at the people that he's picking. He has a corporate cabinet. It's very different than a political cabinet. Politicians don't know much about anything other than their ego. And, these are the same people you couldn't stand in high school and college that wanted to be class president and head of the student council. So he's bringing in high-powered people here. He's bringing in this guy Mnuchin, Tillerson from Exxon, Wilbur Ross. I mean, these guys, I don't want to use the word ruthless business people, but let's say very skilled business people. And if they use those skills for the betterment of all of society, this is a positive movement for the economy.
Can you tell us a bit about your fall 2016 Trends Journal and your latest Trends Monthly?
Yes, the Trends Monthly, we're looking at the top trends of 2017. And one of them is, that this election proved that there's nothing there. So, for example, look at the people that supported Clinton. From Silicon Valley, the Zuckerbergs, the Eric Schmidt, thanks to Google, the WikiLeaks, showing that this is the head of Google that's doing the algorithms and setting up the whole information network for Hillary Clinton. They lost. Hollywood, the Spielbergs, the Katzenbergs, The $100,000 a plate dinners for Hillary Clinton. They lost. The major media, they lost. They all got it wrong. They lost. That's why they're coming up with this fake news stuff, because they're trying to cover up their loss. Keep going down the line. I mentioned Hollywood. How about the actors? De Niro, Clooney, one after another. They all lost. The music business. Beyonce, Jay-Z, standing side by side to Hillary Clinton. They lost. Obama lost. Never in modern history has a president campaigned like he did for her. You got to keep my legacy going. You'll keep it going by voting for Hillary Clinton. Hey, they said, we don't care about your legacy. You lost the House, you lost the Senate, and you lost the presidency. Make it new. People should look at this as a lesson. You can do anything that you want. There's nothing there. What does exist doesn't have depth to it. And that brings me to one of our other trends. Silicon Valley, Rust Belt 2.0. You know, the Rust Belts happened because neither the resources nor the transportation outlet or the manufacturing that they were doing was needed anymore. But it had to do with location. Again, because of the resources or the location, because of the waterways, trail systems, whatever it might have been, or the resources, coal, iron ore, whatever it might have been. So that's the Rust Belt. With Silicon Valley, the mine could be anywhere. You don't need a location. And I just mentioned what happened with the election. They're a very narrow-thinking group of people. And the world is bigger than Silicon Valley. Their mines are in a valley. So start looking for developments going on around the world that are going to make Silicon Valley less and less important. So as trend forecasters, we say, where are those places going to be? What are some of the opportunities?
The Dow was near record territory, around almost 20,000 this week. Following the interest rate announcement, does it look like U.S. markets may have topped this past week, thereby changing the trend?
They may have topped, and even if they come down, they'll come down somewhat. But again, we've changed our forecast. I've been on your show a lot of times and over a lot of years, and we're looking at this very differently with a corporate cabinet that Trump is bringing in. Again, it's different than having politicians in there. These guys are business guys. And Trump we're not afraid of protectionism. There's going to be deals that are cut that are different deals. China's not going to want to stop selling to America or Europe. They're going to want to do whatever they can to keep the business deal going. Same thing with Mexico. So, yeah, there may be a downtick in this, and particularly with interest rates going up somewhat. But we don't see it as a major fall. It may go down 10%, but that's part of the game.
Because these are corporate people and military generals, are these the kind of people who expect to get results instead of doing something that may pander to the electorate?
Well, they're definitely on the business end, but the military generals, they haven't showed me results since World War II. They've lost every war they've started. Well, going back to the Korean War, the Vietnam War, the Gulf War, big deal. They beat a nothing government. The Iraq War is still going on. The Afghan War is still going on. They turned Libya into a hellhole. Syria is destroyed. So I'm not a pro-military guy. And in this country, the military was not supposed to have a prominent role. But if they bring in the military people that have a mind of an Eisenhower, who gave his farewell address warning the American people that the military-industrial complex is robbing the nation of the genius of scientists, sweat of the laborers, and the future of the children. And this is a real guy, he's Supreme Commander of the Allied Forces, 5-star general, and 2-term president. If that's that kind of people he brought in there, amen. If these are men that don't want to fight and they want peace, then great. But if they're going to think we're going to, bomb the hell out of ISIS, I don't want to hear it anymore.
The U.S. seems to be deeply divided. Does civil unrest look like a likely trend?
If the civil unrest will happen if there's kind of racial tensions build. That's the way we see it. If that keeps going on at the level it was escalating, even under Obama, who was a black president. I mean, look what happened with Ferguson and all these other civil unrests. So that's the possibility. And because, as you point out, the division is so deep in this country, anything could spark it.
Is 2017 going to be a battle between mainstream media and independent media via the web?
Yes, and mainstream media is going the way of the horse and buggy. They lost the election. They lost it big time with their arrogance, the same ugly faces, tired faces they bring on over and over again, the same voices, the same people. They called it wrong. They got it wrong. Again, that's why they're going out for this fake news thing. You want to talk about fake news? Hey, remember they were bayoneting those babies in incubators in Iraq, and we got to get rid of Saddam Hussein? That was the first Gulf War. How about that for a big lie? They sold that. The New York slime newspapers, Washington Post, one after another. Saddam Hussein has weapons of mass destruction and ties to Al-Qaeda. Hey, how about that for fake news? They promoted every war that's been going on. There's an article that was written last week, in this past week in the New York Times, about what's going on in Italy with the Five-Star Movement and how they helped defeat Renzi's constitutional amendment. This guy, Jason Horowitz, who wrote the article, mentions that the Five-Star Movement and the people behind them have been using fake news. He mentions it 3 times in this long article and does not give one example. That's not a journalist. His name is perfect. It's Horowitz. He's a prostitute. A Horowitz. I'm a journalist. I put out a magazine, the International Magazine. When I make a statement, fake news, here's an example. Could you figure that one out, Horowitz? Or is it Horowitz? So the media, they're desperate. They got clowns like this little boy and a bunch of rest of them putting out this propaganda, teaching us to hate the Russians, on and on and on. So the people are disgusted with it, which goes back to our first trend. Make it new. They're only keeping themselves alive by shooting off their mouths. And this is a desperate attempt to keep trying to give them some element of legitimacy when they've lost it all.
Gerald, do you believe in my slogan, tell the truth, never be boring?
Yes, of course. I have a definition for hell, my own personal definition, is knowing that you lived a life and you weren't the person you said you were or could have been. And if you lie and cheat and steal, and I want to make this clear, I mean, the older you get, hopefully the wiser you get. I'm not the same guy I was when I was a young guy, very different thoughts. But yeah, I mean, it's only about you. So I want to leave here on a high note. So I don't want to do that kind of crap.
Do smart people seem most comfortable around other smart people and dumb people most comfortable around other not so smart people?
I don't know. Birds of a feather flock together. I guess they made up that slogan for a reason.
Are we likely to see a new normal trend in 2017?
Yeah, I think the new normal there's going to be another level of optimism. I think this is going to fade out a bit. It depends on what Trump does. If he goes and does stupid things like anti-environmental things that could galvanize a movement against him, then you're going to start seeing dissension. If he starts doing things for the public good and in a positive way, those emotions will die down that we have right now. And I really believe it could be a very positive thing for especially America.
Some people are worried because nothing but billionaires have been appointed to the cabinet. They're going to create more of the conditions that made them billionaires instead of helping out the average guy. Or that's what
I said at the beginning.
Yeah.
I said if these guys do what they're best at doing, because they're really skilled at doing it, and doing it for the public good and not for their own good, then it's going to be great. And from what I can only gather from what they've said and what their mission is, it appears that's what it's going to be. Because, as I said, this is a corporate cabinet. This isn't a political cabinet. So in a corporate cabinet, you have a CEO, and that's Trump. And these guys are senior vice presidents. unlike politicians that bow down, suck up, and do whatever they want to do for political reasons, these guys aren't into that trip. They don't need any more money. And I don't think they're doing it for that purpose. And so it can be a good positive if you believe in a capitalistic system, because you have the captains of capitalism doing it. And again, these are all accomplished people. And if they do it for the better good of the people and renegotiate lousy, stinking deals that are, again, by the facts. The United States, since NAFTA, we've got 22 years of negative trade deals with trade deficits with Mexico. The whole thing turned around to a negative. So if they redo these things and say, okay, we don't want to do that one anymore, we're going to do this, and everybody wins a little bit, that's business. Well, it's only business. So if they keep it only to business, focus on the bottom line, and don't get their self-interests into it, I think it's a positive.
Are Brexit and the Trump presidency leading to worldwide economic disorder?
No, what they're doing, it's a breakdown again of that's why we say make it new. It's a failure. They failed. The political systems have failed. Matter of fact, I believe we should ban politicians from running for office. Because what do politicians ever bring to anything? All they've been doing is sucking off the public tit all their lives. They've never had a real job. All they do is want to tell other people what to do. So I believe politicians should be banned from office, because most of them range between sociopaths and psychopaths. So I see, again, it's a very different direction going here. And when you look at what's going on around the world, it's disgust for those people. And the mainstream media. I mean, in the United States, 10% of the people have faith in the mainstream media. And they just proved why then the 10% must be the people that work for the mainstream media.
Well, it's interesting that The Daily Show on the Comedy Network is cited as the #1 news source for young adults.
Again, stupid news for stupid people. A bunch of people with attitudes and arrogance. I've called these people out. They've made fun of me before. I had one of their guys stop by our office, didn't know it was me. And I asked him, I said, what was Jon Stewart was on at the time and Colbert. They both made fun of me. I said, they got these little boys over here shooting their mouth off. Gerald Celente has a message for you. You know exactly where I am. I'm at 57 John Street in Kingston, New York. You tell your little boys to shoot their fat little mouths off on TV, come and talk to me like that face to face.
What was the response?
Like a little boy, he ran away. And I had 2 witnesses out here. The 2 guys are taking cigarette breaks out in front of my place. 2 of the people at our editorial staff.
Will consumer trends change in the new year?
Well, the big ones are virtual reality. Man, this is going to be huge. Artificial intelligence, virtual reality, and those are the real big ones. On the other end, with interest rates going up, there's going to be a slowdown probably in housing and autos. So to some extent in that end, but the technological trends are the really ones to start looking at more and more closely, because we're going into a whole new territory with these things.
Is the trend towards a cashless society likely to get traction? Take
a look what's going on in India. You can read the quote from Modi himself, the Prime Minister, when they called in all the cash, 86% of the cash. He said, we're on the verge of a cashless society. He said it. It's right there. Go to the Wall Street Journal. You can read it. Go over to Sweden. Cashless. It's all over the world. They want to know every penny that we spend so they could get the tax dollars from it and control our lives. That's all this is about. Philippines, they're all doing it. Thailand, one country. Hong Kong's pulling in coinage. Not Hong Kong, South Korea. And so you're going to see more and more of it. Cashless society is on the way. So you say, well, I hate it, I like it. Well, that's not our job. We just say this is what's happening, and that's what we do. And so we say, okay, these are the companies that you might want to look at. They're going to profit from this movement. And there are a number of them that are going to really make big dough out of it. And the whole blockchain thing is real, and it's going to continue to expand.
Of course, if we go to a cashless society, they charge you $2 to $3 to use a non-member of your banking machine.
And that's why I said, look at the companies that are going to make money off it. That's all this is. It's a money-making scheme, more tax dollars for the government, and all the companies that could make money off it. So that's where it's going, unless the people look. They're going to be doing away with the 500 euro note in Europe. You know, we're going to stop them in Canada. I have to tell you, the same thing. They're making it harder and harder to have big currencies. Under the big lie, we're going to stop terrorists and illegal drug traffic. You know, grow up. Who are you talking to? A 6-year-old over here? You know, save your garbage for somebody else. You're doing away with this money so you could watch every penny that we're spending and get your money, tax dollars, so you little politicians could get saluted every time you walk on a red carpet. So take it easy.
What are your trends for China for the new year?
China's going to go through a rough time. The yuan is down. You know, it's 8-year lows against the dollar. Trump is wrong. They're not devaluing it. They're trying to protect it. They spent 20% of their reserves currency doing so. $70 billion flowed out last year. Yuan, $70 billion actually flowed out of the China last month to other countries. They're desperate to keep the yuan up, and they can't defend it anymore as the dollar gets stronger. So they're going to have some real problems with that. And their debt to GDP ratio is 250%. So they have some real problems. So, but they'll keep it going. You know, just print more money. That's all anybody ever does. Whether it's the United States, UK, Europe, Japan, same with China. They'll try to keep but they have some real problems. They have some real big equity bubble, real estate bubble problems, and they're ready to burst. But again, business goes on. They're 1.3 billion people, and they're going to keep buying and selling. And so we say to people, look, this is what's going on. Get a piece of that market. It's the biggest market in the world. And it's going to be one of the most wealthiest. And again, 1.35. What do we have in the States? We have 0.32. You know, we don't even hit the 0.35. And now you're seeing more and more people from China in the middle class using their apps and other kinds of technology to make investments overseas. So whether it's a small investment in a small company or a big investment, they're open to it, and it's going to keep growing.
Will more countries and U.S. states legalize marijuana for the tax revenue?
Well, now we have 28 states in the United States for either marijuana for legal or recreational use, and it's only about tax. That's about it. And because you use the word legalization, what right do they have to legalize it? They should decriminalize it. They legalize it because they want the tax revenue. So you look at the tax revenue in Colorado, which is the most legal state in the nation. They're getting more dough from marijuana for tax revenue than booze. And they've been taxing booze for how long? How many people drink? So they're making more tax revenue from marijuana than from alcohol. So that's why the states are doing it. It's a money game. And people think that the Trump administration will clamp down on it. We don't think so. Again, you know, remember when gambling was illegal? What happened when it became legal? Trump opened up Trump casinos to get his piece of the action. Again, it's going back to the Trump administration. It's the bottom line. It's business. And states need revenue, and marijuana is one of the ways of getting it in there.
Do you see trends forming for gold and the U.S. dollar in the new year?
Yes, we did, and yes, we have. We've been forecasting since early November that gold was going to take a dive, and it has. The stronger the dollar gets, the weaker gold goes. It's a fact. You get interest on dollars, nothing on gold. By treasuries, you're getting something. On gold, you're getting nothing. So, but we're looking at it as a long-term investment, and we're looking at it as I mentioned, all of what's going on in the emerging markets, so the massive amounts of debt they have in dollars. As the dollar gets stronger, their currencies get weaker. It's going to be harder and harder for them to repay that debt. So you have a lot of instability over there in the global economy, and that's why it's an economic disorder at some levels. So the United States may do well, but other currencies and countries are going to have some difficult times.
How is U.S. real estate likely to trend in 2017?
Well, it's going to go down a bit, we believe, because it's really peaked and it's been softening before this. You know, you're looking at key markets where, you know, luxury end is down some 20%. So we think it's peaked, and it's going to go soften from here, we believe.
Gerald, how can people find out more about the Trends Journal?
Trends Journal, trendsresearch.com, trendsresearch.com, and of course we have the Trends Journal, Trends in the News, Trends Monthly, Weekly Trend Alert, and we're the only people that we know that provide history before it happens. So you go to trendsresearch.com, trendsresearch.com, and consider subscribing to the Trends Journal.
Gerald, all the best of the season.
And the same to you, and a Happy New Year.
My guest has been Gerald Celente, publisher of thetrendsjournal.com, speaking to us from historic Kingston, New York. Coming up, real estate consultant Ross Kay next on This Week in Money.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is real estate consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to This Week in Money, Ross.
Hey, Jim. Thanks for having me back.
The Canadian Real Estate Association just released their numbers for November. What's the real story behind these numbers?
The real story is that Ontario has become increasingly weighted as a factor in the average selling price, and it's increased to such an extent right now that it's even covering up the fact that housing prices in British Columbia have collapsed. So everything that you read in the press today, last count there was 83 media reports out there today that regurgitated the Canadian Real Estate Association press release word for word. There were 4 reports from bank economists today. This is the same day that this latest report was released, regurgitating the exact words of the Canadian Real Estate Association, making the exact same false assumptions, the exact same false conclusions appearing in their reports. And I understand how extremely ridiculous that sounds. It makes me sound like some kind of a conspiracy theorist, I would think. But that is simply the fact. The fact is that the average selling price in Canada in November reached $438,000. Canadian Real Estate Association reported it as $480 plus. It's over a $50,000 difference. The number of sales, the Canadian Real Estate Association was audacious enough to say that November had the largest monthly decline in activity since August of 2012, which is a factually incorrect statement. What they're using is a seasonally adjusted number, which is a number that is irrelevant because you cannot seasonally adjust real estate. Anything that follows a cycle that is not based on a calendar year, you cannot seasonally adjust for. The real estate trading cycle does not follow a calendar year, rendering any seasonal adjustments incorrect. The fact of the matter is Ontario had surged forward so much that even the fact that most marks were level or falling, there was still a small increase in the sales activity nationally. There was not a sales decrease. What I will tell you is the Canadian Real Estate Association has also not told anyone that for the last 5 months, or since July, the same time that the Vancouver real estate market went negative, housing prices have been declining nationally in Canada. So contrary to what you may read in the newspapers, our numbers are 100% factual, and we interpret the market in a different way.
I'm just reminding people this interview is being done on December 15th. Ross, they always say in real estate, location, location, location. So really a person looking at housing prices, you have to look at the local market, don't you, not the national market?
Well, I mean, that's true, except that it's what dominates the headlines. So the news that dominates the headlines will be Canadian Real Estate Association states housing prices are up 12% year over year, or the BC Real Estate Association, British Columbia home prices have jumped 20%, or the Real Estate Board of Greater Vancouver says the benchmark price has gone up 30% for detached homes. All of those numbers are inaccurate. They are based on faulty interpretation of the data that is geared towards making you go out and buy a new home. In Canada, this repeated the strategy of monthly releases from 2003 forward, even through the great financial crisis, that has caused the public to have a false opinion of real estate as an investment. So yes, real estate is local, but real estate is also provincial. And your local real estate market cannot escape what's happening at a provincial level. This is just the way that real estate markets function in Canada and in most of the United States. The majority of the United States, individual state markets are the only thing that's relevant. We're going to talk about, I'm sure, a little bit later about the new foreign buyer mortgage credit being given in British Columbia. But that is an example why the market at a provincial level is what's different. That impact is only going to happen in British Columbia. In Ontario, they gave a small land transfer tax rebate of $2,000 to first-time buyers. That's only relevant in Ontario. In Quebec, people rent homes far more regularly. It's part of life there. There's actually a national moving day where you move from one rental to another once a year. That is a fact of that provincial market. So real estate is provincial in Canada. There are local factors that can affect your local marketplace, but those factors would be have to do with environmental concerns, school issues, things of that nature. In terms of the economic impact, they're provincially impacted.
The Canadian Real Estate Association stated in their news release, new mortgage rules have slowed the market. Was that a fair assessment?
No, it's another false assumption by an economist who cannot explain the data. First of all, actual sales increased this November over last November. They increased. They did not decrease. Actual number of sales, even though it was weighted towards Ontario, actual sales increased. The Canadian Real Estate Association actually told people today they decreased. You can look at their own charts. Anybody can look at a 1 and a 2 and see that the 2 is larger than a 1. But they have people believing something that a seasonally adjusted number is what matters when the actual number is what matters. So when you're considering whether the market is hotter or colder, that's what you need to consider.
The BC government released new first-time buyer initiatives. Can you tell us what that could mean? I mean, they're saying they can loan you interest-free up to $37,500.
So what I can tell you is this, is that our members, wealthy homeowner members who are in the buyer program, located in British Columbia, were just given, please listen to this carefully because I am not misstating, a $363,000 reduction in their cost of ownership of the home they buy over the next 40 years because of this move. They have implemented a move that is not going to increase the number of first-time buyer sales because of the way they created the policy. They came up with a convoluted attempt that they must think was ingenious because it's never been launched anywhere in the world as far as I know. You cannot lend and register a second mortgage on a property that is owned with 5% down cash. There would have to be changes to the National Housing Act at a federal level to allow that to take place. Banks would have to go ahead and revise their mortgage documents to allow a second mortgage to be registered on the property to accommodate this mortgage tax credit. Because the BC government has said and it's in their published document, although I'm sure it hasn't been passed, so they may revise it after they hear me speaking about it, which we know they're doing, Jim, on House Street. We know because we watch changes that have taken place immediately after you've interviewed me. You cannot register a second mortgage, which is how the BC government is saying they're going to do it. All that being said, a $37,000 addition to your down payment is only going to impact the qualifying level, the qualifying income levels of those looking to purchase in an irrelevant manner. It's not going to change it enough to make any difference. It's far more different than what community you decide to live in versus what this little tiny $37,000 difference will make. But what I'm saying that is because the only people who are going to take advantage of this are people who are going to buy homes anyway. This is not going to make homes more affordable. This is not going to get people into homes any quicker. You still need 5% down. So that means you still need to qualify for the same. There is no income benefit for this unless you're buying in very select communities in British Columbia. So it is an ineffective policy that will only be used by certain members, include certain home buyers in British Columbia, including our own, to stuff their own pockets. What you're going to see is, because this hasn't been discussed in the media today, is this mortgage credit, mortgage-free loan, however you want it, whatever term they want to come up for it. It takes effect after February the 15th. All of your regular listeners have listened to me speak on this, on your show here, telling you that's the exact same time that housing prices are going to plummet, being recorded by the Real Estate Board of Greater Vancouver. So the already 19-20% house price drop that has taken place will begin to be reported by the Real Estate Board of Greater Vancouver and the BC Real Estate Association about the end of February. What the BC Liberals have done is they're going to make it even worse because they're going to have people encouraged to buy first-time buyer homes, which means this. Jim, if you walk into a parking lot of a GM dealer and people are buying 9 Cadillacs and 1 Chevy, is the average selling price of those 10 cars probably going to be high?
You bet.
If the next month you walk in and there are 7 Cadillacs sold and 3 Chevys sold, do you think the average selling price of those 10 cars will drop?
Exactly.
Exactly. That's what they're doing as of February the 15th. They're saying more first-time buyers are going to buy homes. At the same moment in time that the average selling price is crashing, driving the average selling price lower, at the exact same time they're going to the polls, meaning your economy is going to be in serious difficulties at that moment in time. All fueled and blamed on how the BC Liberals have handled your housing market.
All the real estate boards across BC had a vote to amalgamate into one board this week. Can you tell us the results and your view on the outcome?
For your listeners who are not realtors, I am happy to say that we were involved in some of this, so I've got to come clean on this. We have been in contact with hundreds of agents over this issue, explaining to them that it wasn't in the consumer's best interest to amalgamate the board. The truth is, it was in the realtor's best interest to amalgamate the boards because it would have given more control of the real estate market to the realtors. They have voted no because some ethical realtors stuck to their guns and they didn't vote to amalgamate. Meaning, if you want real estate data or real estate information on the Vancouver real estate market, you can get it in Vancouver. You can get it from a Vancouver real estate agent. If you want information from the Fraser Valley Real Estate Board, places in the Fraser Valley, you can get it from the Fraser Valley Real Estate Board. If you want information on the Okanagan, you can get it from the Okanagan mainland. And that. What they were going to do is force you to get that information from one source, the British Columbia Real Estate Association. That would have given that association control of all the real estate information in British Columbia, removing all the checks and cross-references that can be done when real estate data is owned by a series of real estate boards. What that means is that when the Real Estate Board of Greater Vancouver fudges a number or uses a benchmark price or uses some statistic that they want to uphold, and Fraser Valley uses another one, it allows one board to discredit the other board's real estate statistic and for the consumers to be able, in some small way, to try to interpret what's the truth. Had they received all of the information and had it all been delivered from Cameron Muir's voice, you would have had a consistent message across a consistent message of disinformation across the province, geared solely to the benefit of the realtors. So this vote, thankfully for every homeowner in British Columbia, is going to protect them, because the information now is still going to be spread out across multiple sources, and that multiplicity of sources forces each of the real estate boards to come to a higher level instead of, as a single unit, sink to the lowest common denominator.
The U.S. Fed raised interest rates earlier this week and suggested 3 more increases were in store for 2017. Can you explain how that could impact the Canadian home ownership market and what that means long-term for Canadian homeowners?
Well, for people who are leveraged and who received a mortgage in the last 2 years, maybe trading up to a bigger house or refinancing for some purpose, and they were pushing themselves to the limit, a 1%, so we take 25%, a 0.25% increase on this recently, and they say maybe 3 more next year. So let's say we go to a full percent, even 0.75%. When your interest rates are only at 1.92%, which is the rate we're able to get for 5 years, just a month and a half ago, and you increase those interest rates by 0.75%, it's a huge increase in the amount of income required to qualify. So what that means is that when you want to renew your mortgage 3, 4, or 5 years from now, you know that it's going to be renewing at a substantially higher rate. Historically, that wasn't a concern. It's a concern now because of recent changes to the mortgage lending requirements imposed by the federal government. Because now you're basically going to have to go back. Well, certainly in Vancouver, you were in British Columbia, you were going to have no choice but to go back to your exact same bank and pray that they will renew your mortgage. We all know that when banks have the power, they use that power to increase their profits. That has gone on since I got into the business back in 1987. It has never changed. The banks have been given a tremendous amount of power by the federal government to leverage their existing residential mortgage clients at the time of renewal to boost their bank profits. So, as we entered this phase, we were looking at over a 2% decrease on the discounted 5-year mortgage rate. Forget the fact that interest rates could go up 1% in the next year. Just imagine if the bank decides we're no longer going to give a 2% discount, we're going to give a 1% discount because we're no longer competing against the other banks for your business. You have no other choice. You can't go anywhere else because your property value has dropped, because Vancouver house and British Columbia housing prices have dropped. 1% increase at the federal level in the U.S., which will result in a 1% increase here in Canada, contrary to what everybody's going to tell you. Believe me, it will turn into a 1% increase. All of a sudden becomes 2%. And now you've got an affordability issue, and now you've got a market that is in total chaos, and in British Columbia's case, on top of a market that has already undergone a huge house price correction in the last 5 months.
Ross, thank you so much for being on This Week in Money.
Thanks a lot, Jim.
My guest has been real estate consultant Ross Kay from thewealthyhomeowner.ca. Coming up, the closing numbers from the Canadian equity markets next on This Week in Money.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Here are the Canadian equity market numbers for the past week. The Toronto Stock Exchange high for the week was 15,414.57. The low for the week, 15,175.98. It closed at 15,252.20, off exactly 60 points for the week. The Toronto Venture Exchange, the high for the week was 757.98. The low, 727.63. It closed at 735.22, off 13.58 for the week. The Canadian Securities Exchange, high for the week was 815.88. The low, 777.55. It closed at 783.71, off 1.44 for the week. Well, that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Gerald Celente, and Ross Kay. And thank you for listening. If you have any questions for us, you can email us at howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.